Hello and welcome to this introduction to IFRS video series where we will be discussing about various international financial reporting standards. This is Ujjwal from EasyBooks Consult. EasyBooks provides easy and convenient accounting and reporting services. Today we will be discussing about IFRS 8 operating segments. IFRS 8 was introduced in 2006 but was effective from 1st January 2009. The objectives of IFRS 8 is to set out the principles for the disclosure of information for an entity's operating segments, to enable users of the financial statements to evaluate the nature and financial effects of business activities in which it engages. IFRS 8 is applicable to separate financial statements of an entity, the consolidated financial statements of a group with a parent, whose debt or equity instruments are publicly traded or whose debt or equity instruments are in the process of being issued in the public market. However, where an entity presents separate financial statements with consolidated financial statements, segment information is required only in the consolidated financial statements. Steps involved in IFRS 8 are: identify the operating segments, identify the chief operating decision maker, identify the reporting segments, provide disclosure. Now, who is Chief Operating Decision Maker? Chief Operating Decision Maker is a function, not necessarily a manager with a specific title. The function of Chief Operating Decision Maker is to allocate resources and to assess the performance of the operating segments of an entity. Typically, Chief Operation Decision Maker will be the highest level of management at which decisions are made. But if a supervisory body is required to provide approval for these decisions, then judgment is needed as to whether the supervisory body is the chief operating decision maker. What is operating segment? Operating segment is a component of an entity that engages in business activities from which it may earn revenues and incur expenses, including revenues and expenses relating to transactions with other components of the same entity, whose operating results are regularly reviewed by the entity's chief operating decision maker to make decisions about resources to be allocated to the segment and assess its performance, and for which discrete financial information is available. Here, an operating segment may engage in business activities for which it has yet to earn revenues. For example, startup operations may be operating segments before earning revenues. Few examples of operating segments can be: startup can be an operating segment, headquarters of a company, not an operating segment, may not earn revenues or may earn revenues that are only incidental to the activities of the entity. Segment that provides services to only other segments of a company is an operating segment. How do we identify an operating segment? An operating segment can be identified if it satisfies all of the three criteria, else it is not an operating segment. Here, the component can earn revenue and incurs expenses. If no, not an operating segment. Yes, the results are regularly reviewed by the chief operating decision maker. No, not an operating segment. Yes, the discrete financial information is available. No, again not an operating system. If yes, then the component is an operating segment. These three criteria must be met, and if any one of the criteria is not met, then the segment is not an operating segment. Once the segment or the component is identified as an operating segment, it has to be identified or it has to be ensured whether it is a reportable segment or not. And what are the criteria for an ag segment to be a reportable segment? It is identifies an operating segment or is identified as a segment due to result of aggregating two or more of the segments. Aggregation criteria shall be the nature of the product and services, the nature of the production process, the type or class of customer for their products and services, the methods used to distribute their products or provide their services. If applicable, the nature of the regulatory environment, for example, banking, insurance, or public utilities. For a segment to be a reportable segment, it must exceed the quantitative threshold, which is a segment's reported revenue is greater than equal to 10% of the combined revenue. The absolute amount of its reportable profit loss is greater than equal to 10% of the greater in absolute amounts. The combined reported profit of all operating segments that did not report a loss and the combined reported loss of all operating segments that has reported a loss. Its assets are 10% or more of the combined assets of all operating segments. Operating segments that do not meet any of the quantitative thresholds may be considered reportable and separately disclosed if management believes that information about the segment would be useful to users of the financial statements. The external revenue of the reportable segments must be greater or equal to 75% of the total revenue. If total external revenues reported by the operating segment is less than 75% of the total revenue, additional operating segments need to be identified until at least 75% of the entity's revenue is reported. There may be a practical limit to the numbers of reportable segments that an entity separately discloses, beyond which segment information may become too detailed. It can be limited or limit it to 10 segments. Information about other business activities and operating segments that are not reportable shall be combined and disclosed in an all other segments category. If management judges that an operating segment identified as a reportable segment in the immediately preceding period is of continuous significance, information about that segment shall continue to be reported separately in the current period even if it no longer meets the criteria. If an operating segment is identified as a reportable segment in the current period in accordance with the quantitative thresholds, segment data for a prior period presented for comparative purposes shall be restated to reflect the newly reportable segment as a separate segment, even if the segment did not satisfy the criteria for reportability in the prior period, unless the necessary information is not available and the cost to develop it would be expensive. Summarizing the reportable segment, a reportable segment is an operating segment that exceeds the quantitative threshold or an aggregation of two or more operating segments based on defined criteria that exceeds the quantitative thresholds or an operating segment for which management believes that providing the segment information thereabouts would be useful to users of the financial statements. Now, what are the disclosure requirements of IFRS 8 operating segments? General information, information about profit or loss, assets and liabilities including specified revenues and expenses included in reported segment profit or loss, segment assets, segment liabilities, and the basis of measurement. Reconciliations of the total of segment revenues, reported segment profit or loss, segment assets, segment liabilities, and other material segment items to corresponding entity amounts. Entity-wide disclosures. Talking about general information can be factors used in identify the reportable segments, including the basis of organization of the segments, judgments made by management in applying the aggregation criteria, a brief description of the operating segments that have been aggregated and the economic indicators that determine the aggregation criteria, and types of products and services from which each reportable segment derives its revenue. Regarding the disclosure of information about profit or loss, assets and liabilities, an entity shall report or measure a profit or loss for each reportable segment. An entity shall report a measure of total assets and liabilities for each reportable segment if such amounts are regularly provided to the chief operating decision maker. If reported to chief operating decision maker but not reported in measure of segment profit or loss, the following about each reportable segment should be disclosed. Revenues from external customers, revenues from transactions with other operating segments of the same entity, interest revenue, interest expenses, depreciation and amortization, material items of income and expense disclosed in accordance with paragraph 97 of NAS 01, presentation of financial statements as revised in 2012, the entity's interest in the profit or loss of associates and joint ventures accounted for by the equity method, income tax expenses or income, and material non-cash items other than depreciation and amortization. Additionally, an entity shall disclose the following about each reportable segment if the specified amount are included in the measure of segment assets reviewed by the chief operating decision maker or are otherwise regularly provided to the chief operating decision maker if even if not included in the measure of segment assets. A. The amount of investment in associates and joint ventures accounted for by the equity method, and B. The amount of additions to non-current assets other than financial instruments, deferred tax assets, post-employment benefit assets, and rights arising under insurance contracts. Summarizing the disclosure requirement about information of profit or loss, assets and liabilities. A disclosure of reportable segment profit or loss is a compulsory disclosure. Reportable segment assets disclosure if reported to chief operating decision maker regularly. Reportable segment liabilities disclosure if reported to chief operating decision maker regularly. And disclosure of amounts which are included in reportable segment profit and loss reviewed by CODM but not disclosed in measure of profit and loss. Example: a revenue from external customers, internal revenues, interest revenue, interest expense, depreciation and amortization. Not disclosed in measure of segment assets but reported to CODM. Example are investment in associates, joint venture, non-current assets, etc. An entity shall disclose the reconciliations made under operating segments, and the reconciliation are: an entity shall provide reconciliation for all the following: the total of the reportable segments revenue to the entity's revenue, the total of the reportable segments measure of profit or loss to the entity's profit or loss before tax expenses or tax income and discontinued operations, the total of the reportable segments assets to the entity's assets, the total of the reportable segments liabilities to the entity's liabilities if segment liabilities are reported, the total of the reportable segments amount for every other material items of information disclosed to the corresponding amount for that entity. Entity-wide disclosures. An entity shall also disclose about the information about products and services like revenue from external customers, for each product and services or each group of similar products and services. Information about geographical areas like revenues from external customers attributed to the entity's country of domicile and attributed to all foreign countries in total, and non-current assets attributed to the entity's country of domicile and attributed to all foreign countries in total, and the information about major customers for which revenue is at least 10% of the entity's revenue, or to disclose the total amount of revenues from each major customers and the identity of the segment reported in the revenue. So this was the introduction to operating segments as reporting as in IFRS 8 operating segments. And if you wish to learn more about this topic along with examples and practical implications of the same, please feel free to contact us at easybooksconsult@gmail.com. Please feel free to subscribe to the channel and hit the notification bell so that you do not miss any new videos related to IFRS or other financial matters. Thank you for watching.